Ladies and gentlemen of the crypto space, we're live on a Wednesday, April 24th at 11:55 a.m. If you hear from YouTube or X, you're going to be thinking a lot of things, and you're probably going to want to put some comments in the stream, and we're going to be able to talk about everything that's going on in your minds, because we're going to look at some very specific things today to get a sense of what the hell's going on. Headwinds, that's what's going on. It's called headwinds, and two very obvious headwinds are the dollar and tax season, which we see with the TGA, the Treasury General account. And if you take the Fed balance sheet minus the TGA minus the reverse repo, you get a sense of a headwind. Clearly, a hotly debated reality, Fed liquidity, Fed net liquidity. I don't need to get into that, but it's either a headwind or a tailwind. Headwinds pushing against you, tailwinds supporting you, moving you forward. So right now, we got a lot of headwinds in the market. Let's take a look at the big one, and that's the yen, just punching right through 155. And this is very imperative for everyone that's interested in crypto to understand. Because one of the biggest narratives in crypto is you hate the dollar, get out of the dollar, everyone's dumping the dollar. Yeah, that's not what the chart says. That's not what all the charts say. The dollar hasn't been more popular in decades. In fact, they're dumping every other currency for dollars around the world. The demand for the dollar is what causes these types of headwinds. This chart is a manifestation of purchasing the dollar using yen, one way or the other. Directly or indirectly is irrelevant, and the net result is another currency buying the dollar. And this is a massive headwind because this is causing a variety of systemic distortions in Japan. This is highly inflationary. As this number goes up, everything gets more expensive. Every import gets more expensive. What's the most important import that gets more expensive? Energy. So energy is more expensive there. It slows down the whole economy. And China is probably more important, or at least comparably to what's going on in Japan. It's a bigger economy. Japan owns the first and the second amount of U.S. debt, so it's a major debt recycler for the United States. But in China, they threw everything and the kitchen sink at deflation. Like literally, they had negative numbers across the board. Pretty sure it was negative GDP, but everything was contracting. And the person to follow with regard to stuff like that is good old Jeff Snyder. So they threw everything at the yuan, and they still can't get it to move favorably. Favorably being actually appreciate. So it's still deflating. Now, that's really the question, and that's causing the headwinds for macro folks. What are they going to do? If they don't get an external actor to buy their currency, it's just going to keep depreciating relative to the dollar. And this is the nature of foreign exchange and global currency regimes of nation states. It causes a tremendous amount of complexity and distortions. And right now, this is the big headwind. At some point towards the end of the year, we'll see more favorable conditions with regard to domestic U.S. But between the two of them, right about now, it looks like we're going to be slowing down for a little bit. Bond market's still selling off. The term premium popped on U.S. bonds, as Mike Howell noted, which implies the market is wanting higher rates for to buy these things. They need more incentive. So that's going to cause more tailwinds. The U.S. government has to refinance a tremendous amount of debt this year, $10.8 plus trillion all in all, from historic debt and especially debt issued since 2020, pandemic-related debt. And that causes a lot of pressure. And now who the hell is going to buy it? If their currencies are weakening and you need to buy dollars to buy the U.S. debt, that further weakens the country's currencies. So they're not in a position to refinance this debt. So that presents domestic U.S. complexities. Who's going to buy the debt? And that brings up old QE, old smoky QE, and that whole hot topic. And that's why the SLR, they want to potentially finagle U.S. commercial banks to just onboard infinite treasuries, and they could just be the recycler of last resort, so to speak. So the Fed doesn't have to do QE. It's just the commercial banks that do it. And it's going to be very interesting heading into the end of the year because a lot of shit needs to be resolved. And in my mind, as the imagery suggests, there's nothing you could do. Just sit back and watch. Watch the people that are tasked with managing this ridiculous system figure out what the next steps are. Because the alternative, you can't do anything about. So if you can't do anything about it, you need to train yourself to not worry about it. Therefore, what is coming is degrees of intervention across the board. And it's frankly global at this point. Like big global, big pressure in the currency markets, big complexities geopolitically. So we're going to see interesting things in 24. It's not even just crypto market stuff. Like that's the stuff we're interested because we think it's going to rectify our repression or a lack of capacity to do what we want to do financially. Well, that's meaningful. But I'm sure everyone's tune would change if geopolitical conflict started to erupt to be more aggressive. So just remember to put things into perspective. You need to compartmentalize things and address things discreetly. That's something to worry about to a degree. Same thing applies. What could you possibly do about it? Only worry about things that you can influence. Whole Serenity Now type prayer stuff. So we'll take a look at DeFi Llama and see the state of crypto markets. Generally, before we look in there, it's a bloodbath. Everything is rolling over, and it's not prices. I don't really look at prices other than thinking in terms of a discount. What I look at is to understand the same thing in macro financials. I look at crypto macro financials to understand the state of markets. What's the flow? And clearly y'all feel the sentiment rolling over. But that sentiment is because of this data, or at least is quantified by this data. Now the volume is a big deal. Volume is really people doing things. And if people aren't doing things, things are recursive, meaning if someone's not doing something, another person's, and then it causes other people to not do things, which causes more people to not do things, and everything really slows down. The nature, the fundamentals of nature, cyclicality. What goes up comes down. What's exciting becomes boring. What's boring becomes exciting. And that's the frenzy that everyone just saw a short couple of weeks ago. And it was an absolute frenzy. Volume was everywhere. Base was exploding. The meme coins were going to monetize the world, and everyone was going to become millionaires. And no more worries because everyone could pay everything and cause inflation until everyone's ears start bleeding. But as you can see, there's a minus 27% week over week volume in the crypto space. And that is a massive, massive delta. That is going to cause a tremendous amount of emotional response in people acting in this space. Opportunity is appearing to evaporate right before your eyes. Maybe you should have a little bit of a perspective that's larger, longer. So if you think back in maybe 2, 3 weeks, 4 weeks, the meme coin frenzy, what was before that? And then what was before that? And then what was before that? Write it down if you have to, the cyclicality that you're observing. and then correlate what you write down, what's hot, what's popular, with this data with regard to volume. And I see a couple of very interesting things that we've discussed. Like Base really comes to mind because its relationship to Coinbase, a monumental amount of monetization, or rather exogenous capital flows to be specific. There's so many dollar liabilities flowing onto Base, it's quite extraordinary. And that's a big deal. And the opportunity on Base is going to be and has been a big deal. But the obvious thing to see is what's occurring and what will occur even further until volume turns around. Will be a complete consolidation of the meme coin space on Base and the concentration of remaining capital into few meme coins. Andy and a couple of others. Well, Brett, I'm sorry. Andy's on mainnet, at least the popular one. And Brett's on Base, and that's going to take a lot of capital to monetize. All right, great. If that's your thing, if that's where you find your comfort, but you need to really define your rules, and if that's where your comfort is accumulating those types of assets, so be it. Hope you have revenue streams so you could keep accumulating. Something to think about, because revenue is the precursor to being able to buy something. So I wouldn't really want to be doing that with work money, like physical work. Physical work pays bills. So I was talking to my wife the other night, and I said the almighty phrase, buy a salary. And she looked at me, knowing me, and was like, yeah, that kind of makes sense now. Now, that's obviously my wife, but if you talk to anyone, like general public, that's a weird phrase. And that's what I look to, I think, in terms of buying salaries, because the salary gives you receipts, income, and you can buy things. Maybe your favorite meme coin, maybe another salary, and you compound. In a couple years' time, you're going to be good to go as the cycle continues. Sure as hell is going to continue. DEX volume minus 27% in the entire space. Everything's down. I mean, mainnet 30%. Binance Smart Chain 20. Oh, goodness gracious. Phantom, still not off the ground yet. Sonic's going to be interesting, though. I don't really look at Cello, Avalanche. Oof, 40. Oof, 34. Base is big down from top. That was up at 600 mil, and now it's at 3 and change. That's like 45% decrease in day-to-day volume. That means half the people doing shit are not doing anything anymore. Quite remarkable. ICP is a new one on the list. What the heck? 70% down, 59,000 in volume. Yeah, that's not a market where you want to engage. Oh my God, $50,000 in volume. Let's look at the stablecoins real quick. Take a look at the stablecoins to see the flows. The one that is most impressive with regard to delta in exogenous flows. Okay, maybe it's not. Maybe it's TVL. Maybe that's what I was looking at. Where is not there? Overview? What was I looking at? It's base here. 1.67 bill TVL. I thought I saw more stables. What am I missing? What am I missing in the data I was looking at? I mean, that's just a remarkable TVL, but TVL doesn't really mean much the way I define it. Because if you're going to sell something, you're selling for stables. And if you want to buy something else, your DEXs are going to route you through stables or where the liquidity is. So it's a dollar-denominated world, as I literally opened this entire stream about. You need to cure that. If you want to be successful in crypto markets, you need to cure your anger at the dollar and understand it for what it is, because it will be the system you're operating in for a long time to come. And it's going to get weird in order for policymakers and government and regulators to do that, to keep the system going. And that's what they're going to do. because the alternative, you better have a lot of meals ready to eat. MREs. Let's go back to stablecoin. I mean, literally, here's the kicker. Here's the kicker that is peering through the madness. Volumes rolled over. You're up week over week in total crypto market stablecoins. Seriously? You're up 3.6% is a positive sum environment on mainnet. And 3.6% on $83 billion is a relatively large amount of dollars. Let's flip through this real quick. Marginal negative sum, arbitrary and positive sum, 1.23, 3.4 billion. That is impressive to say the least. Solana and Arbitrum basically in the same league, 3.2, 3.4 respectively. Avalanche finally a positive sum environment, getting a little bit of exogenous flows. POS Polygon 1.5 bill. Well, that's interesting. Optimism almost up to a bill. Positive sum 2.3. Optimism. Let's look at, skip over all this. It's kind of small. Basis, I don't think this is right. I don't think this is right. Last I saw, I don't know. I think the data here is a little, it's missing something. It's not minus 94%. So there's something about it. But base is the place where a huge amount of capital flow, exogenous capital flow can come in from Coinbase into Base. So this is a place to certainly keep one's eyes on and consider exposure. If you're considering exposure, think in terms of a discount. Clearly, no discount is available on Aerodrome. Stopped that at $2. Spiked through at 233. Literally, someone paid 233 for something they could have paid $1.45 for right now, and the market's volume is rolling over hard. Momentum builds, trends continue until capitulation. Things don't just spontaneously reverse to the upside. What's going up continues up, what's going down continues down until some sort of event, some sort of change that starts at the margin, something relatively small, and directionality changes. But that doesn't look like it's going to happen right now. The volume is very low and rolling over quick. I would love a discount. I'd love a discount. Let's take a look. Let's take a look at what would be a discounted price on Aerodrome, just for the fun of it. Boop, boop. We don't have to draw it from down there. I mean, we could draw it from this level. Well, we're talking about a discount, 50 cents, 60 cents, may hold support. Maybe you get a fat wick down to like 45 cents. Now it's considerable. 45 cents on a buck 40, talking about 75%. Ooh, still. All right, now you're talking about like velodrome type market cap. Maybe a little bit more. So you pay a base premium. Maybe I can see a base premium warranted. Base is an optimistic super chain, so it's optimism, but it's base, so probably warrants a little marginally higher market cap than Velodrome. 150, 175, maybe 200. Okay, so between 236, 382, it's a considerable region. See a wick below. Now you're talking discount. If you only buy at discounts, your portfolio is going to do well. So choose the correct assets at discounts and diversify accordingly, and don't buy at a premium. If you can't own something, that's okay. You telling me there's not infinite things to choose from? All right, so don't chase into shit, and otherwise this shit happens and it rolls over. Look, fresh lower low. If you get below, what is that? $1.30, about 9-10 cents from here. You're heading into a region where you could relatively quickly head to 95 cents less than $1. That's a big capital loss. But if you buy at a premium, By a discount, you build buffer. How much lower can things go? I mean, the king of how much lower could things go is stuff like curve. How much lower could this thing go? And how many times can it be tested? Testing is a critical inspection of technical data, and it has been tested for years at this point, at this level, which is pretty much an expectation given the monetary policy and the design of the protocol, what it's designed to do, which is very similar to V33 in regards. Different alignment of incentives, which is why the V33s have appreciated to such an extent. Much more predictable and visual, emotionally driving incentives for vote locking. So it's definitely an improvement in that regard. But testing to the downside and failing to fall to the downside means there's an inherent floor to it, and it gets pushed through, but then a discount zone happens where you could buy 30, 40, 50% return on your money, and every time it goes down, that percentage spikes up. So if you're buying at 30 cents, which we haven't really gotten to, but 75% return on the money from third parties and from interest on debt, it's an inherent floor, because just as it goes down, the opportunity presents itself. 75% is a hell of a number on cash, on an investment. Okay, so let's go back to anything left in stables land. So we see a marginally positive sub-environment across the crypto space, which is comforting, which means I think we're going to be not in significant depreciation across the broad space. I think things will be relatively stable, ranging, maybe marginal, 15%. Let's take a look at Bitcoin and see what could play out. Obviously, things are down. We're at 66, down about $1,400, give or take. This is the monthly chart. 6 days left in the month. You know me and my high time frame stuff. I can't look at anything less than a monthly if I really want to get a sense of what the hell's going on and where things are heading. So this is a constructive 2 candles the last 2 months. There's a big push through to all-time high, pre-halving, post-halving. You're finding a great deal of support. I would say this region is what I look at, about 6130. 61,300, excuse me. It's not at a discount. Shit's at a premium. Look at that monthly time weighted average price down at 38,000. Give it a month or two and the time weighted average price, let's say it gets to 45. Now if you push through 45 to the downside down to like 37, now you're talking about a discount. So watch for the discounts. Deviation to the downside through moving averages is an expression of a discount. Being above the average price is a premium. Nature gravitates towards the average. It's the way cycles work. It's the way behavior works. And it is the way. If you buy at a discount and the market goes to a premium and the secular trend is that moving average going up, then you just have time. You got to let time do the work, and that's it. And it's as simple as that. Let's hit some comments. Ethereum is lagging, obviously, albeit it is green on the day, denominated in Bitcoin. Structurally, it looks good. Ethereum is at a significant premium as compared to Bitcoin from an average price standpoint. What is that, like own Bitcoin or Ethereum? And my sentiment at this point really is you're not going to really outperform with either one unless you have a large chunk of change. If you're going to get a 5, 10x on Ethereum and you have $1 million, great. Turn $1 million into 5 million to 10 million. If you buy $1,000 worth of Ethereum and by the end of 2025 you're at 5 grand, 10 grand, that seems like a fair amount of opportunity cost. So the favorable perspective, even with myself, maybe like 5 figures or so in various cash positions, I think of these as cash. So in that regard, I favor Bitcoin. It's going to underperform. Other things will outperform it. But I favor it because it's more consistent and it has a much more clear path with regard to its trajectory, and also the overarching narratives of what Bitcoin is with regard to proof of work and immutability, decentralization, all that stuff. And yeah, sure, it's arguable that proof of stake is what it is, but that's separate and apart from the fact that you have to make these definitions. You have to digest all of those attributes and say, this is what I'm going to do, and these are my rules, and that is my rule. So Bitcoin and the Ethereum denomination is you need Ethereum. You need spending cash because you need it to actually engage with transactions. So I don't really go too much back and forth with regard to the spread between those two of the most popular assets. But what I've spent a lot of time on is trying to simplify the equation. It's a waste of time to try and trade back and forth between them. So I treat them as cash at this point. Bitcoin dominance. Let's take a look at that real quick. So obviously, a lot of folks see Bitcoin dominance spiking one more time. Technicals seem to indicate that. You can have a fat rip to the 100 SMA in the monthly. That'd be a really nice dip across the entire space of everything other than Bitcoin. Why not? From a technical standpoint, that's clearly depicted on this chart right here. We have a bullish cross of the time-weighted average price in the 50 SMA. Already have a 10 SMA, 50 SMA bullish cross. That's engaged. I'm not too big. I'm looking at history, like this period right here, because clearly we had some crosses and we broke through the time-weighted average price. Very different market back then. It was a different world, completely different world. So it's apples and oranges in so many regards. Doesn't matter. Doesn't matter if Bitcoin appreciates. I mean, this reminds me of like currency charts, because currencies are relative. All right, great. Bitcoin appreciates and it outperforms other investments, but the other investments could also appreciate very nicely. They'll underperform relatively to Bitcoin, but that's not the point. The point is the other things are investments. And I don't define Bitcoin as an investment. I define it as a cash. Therefore, the appropriate operating procedure remains the same. Buy investments or invest at a discount. And the primary criteria for what a good investment is X, Y, and Z. One that actually pays you. So you can actually have more cash. Okay? Pretty simple. My reductionist rule set. Anything interesting else going on in technical data? WIF, diversion on the daily, 8.3% today. Stunning how certain meme coins, when they get popular, they outperform. And, Pepe, Brett, Andy, WIF, dog, WIF, hat. The hat is clearly staying on, boys and girls. And Bonk, still there. Solana, the original meme coin on Solana, I guess, in regards. It's clearly one of the first early, relatively. Very interesting stuff. Not my cup of tea, but certainly very interesting and imperative to understand. Imperative to understand. Anything else? DXY, marginally up today. I don't really account too much strength in the DXY, particularly as the cause of today's price action. I think the yen is really scary as shit. I think the pop in term premia on U.S. debt is pretty scary. I think China throwing the kitchen sink at the yuan and it's still depreciating is pretty scary. Everyone, look, all of this is all green. Japan, Korea, Euro, China. Buying dollars. Food for thought for why it's imperative to not hate on the dollar and understand a little bit more depth of what is the dollar, which is something obviously we've covered to a great extent. Raul's in the house. Hello. Tapsy, oh my God, the visual from The Departed, Leo DiCaprio. Good morning. Geld's in the house. Ricky, Easy Cap, long-time listener, first time live. Welcome. Welcome. Pop any questions you want in there. I'm more than happy to talk about anything. Bro, how are you not more popular? I've listened for years and you just split gold. Um, I have a I don't tell people what to buy. I teach methodology, talk psychology, I talk macroeconomics. This is complicated shit. I don't know. It's okay. It is what it is. I'm not here to cater. I'm here to ultimately talk to myself, which is literally what I'm doing right now. This is a giant monologue. And why do I do that? Why do I talk to myself with other folks listening? Because it allows me to process my thoughts and help folks as part of the equation. But as you guys ask questions, that helps me further process my thoughts. And I'm able to orate it, articulate it, and that helps technically all of us understand this stuff better. And if anyone remembers my original content, holy crap, we've come a long way. Really understand this stuff now. Macroeconomics, global financials, the way the dollar works. I mean, that's like revealing the secrets of the universe. Like the way the dollar works is really fascinating. It's scary, disappointing, can make you angry, sure. It's not simple. That's an extraordinarily complicated system. What is it? It's concordonomics. Yeah, check this out. So next time you think a dollar is simple, it's not. It's all of these charts. It's not even one of them. This is just part of the equation. 1, 2, 3. Oh my God, zoom. 4. And this is a good part of the equation. He breaks it down really well. It's an extraordinarily sophisticated system. And it's not as simple as people think it is. So the better you understand it, the better you're able to understand why the dollar is rallying so damn hard when everyone's like, oh, they're just going to debase your currency. Yeah. Because if we don't debase the currency and we don't meet the demand for the currency supply of other countries, they want to buy our shit. And if we don't give it to them, their economies blow up. And then you're not buying anything from China. You're not importing anything from anywhere because you don't have allies. And they're not manufacturing because their economies just blew up. So that's in good part why monetary policy folks, regulators, so on and so forth, do what they do. To cater to the demand of the international market for the currency that they happen to be able to print to meet demand, both internationally and domestically. And it's clearly heading in a bad direction. Of course. So understand it, because this direction is going to keep getting worse and worse and worse. And there's no switch. There's no, boom, fix it. Boom, Bitcoin fixes this. Yeah, check back in 20 years after you have some sort of civil war and maybe a geopolitical hot war between countries. Yeah, sure. So at least process causality, cause and effect. The U.S. doesn't devalue the dollar and Japan collapses and you have the most populous city in the planet, Tokyo, in chaos. And Korea collapses, and then China falls into anarchy, and then that just spreads. That's like global financial crisis in the U.S., how the banks kept failing. Bear, Lehman, boom, 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 boom. You got to restore confidence. Same thing happens with countries. It gets really spicy really quick. And literally, you're telling me if those collapses in countries are because the U.S. is not able to stabilize the global currency markets by supplying dollars in the forex markets, they shouldn't, because we shouldn't print, we shouldn't debase the currency because it's the right thing to do. It's the right thing to let your allies fail, let their financial systems fail, and let that chaos spread, that cascade effect occur, the dominoes of countries failing. So I think folks are off base, and because they don't understand the causality. If we do this, it causes these effects. Now, clearly, disparity is raging here in the States. This was a crazy, crazy clip. You go on my profile. It's shortly here, this one. Benny Johnson posted this from MSNBC. This is, I could post this link in the chat. Listen to that. That's horrible. I think of literally my experience in like 2008, 2006 when I graduated college, and it was pretty bad. I would never be able to buy the home I live in if it was today. It's just not possible. And that's scary. It's not fair, and it's going to get a lot of people angry. This is a great clip to really encapsulate really everything that's going on, and it's heading in the wrong direction. But what's important to understand, all this wrong direction shit and all this keep the whole global system going internationally by somehow supplying dollars, some sort of accord to devalue the dollar relative to other currencies. It's exactly what everyone's saying that it's going to do to asset markets, which further makes the disparity worse. Asset markets at some point are going to rally frickin' hard and melt TF up. And then they're going to collapse. And then they're going to bail out the system. Yeah, it's perverted, it's gross, but do you understand the causality, the sequence of events of why it occurs, how it's going to occur, and why there's no alternative? And there's no, this fixes it. It doesn't work like that. The system has momentum. People have momentum. Think to yourself, here's an interesting one about momentum. You wake up in the morning, a few of you remember 9/11, but that shit was chaos that day. And you felt it. You felt it different. I grew up in New York, and I remember Sandy. Maybe you could think of some sort of societal disrupting event that you've experienced where you wake up in the morning and it would have been a typical Monday, get on the highway, go to work, but something was different. And that's kind of like return to office. Like my first drives back to the office after 2020, maybe in like 21, 22. It was weird. There was no one on the highways. It was completely empty going into the city of Miami. Drive right in. 25 minutes instead of an hour and 20 minutes. That is what causes chaos. That kind of disruption to the fabric of normalcy. And that's something to fear and understand. You can't just flip a switch and say something fixes this. Bitcoin fixes this. Because that alone disrupts normalcy. You can't disrupt normal. That freaks humans out. And humans do not respond well to the disruption of normalcy. Just a couple of thoughts. I clearly digress significantly. Sergio present. No horns, no tail. Good morning. What do you think the lowest curve floor is based on the current cash flow? I mean, let's take a look at some numbers real quick. It's not going to be like real-time numbers, but we could take a peek. So here's curve. We're going to go to the classic UI. We're going to go to the use curve screen. And let's see if this data loads. And then we'll also go over to vote market. Doing some numbers. All right. So $1,600, 53%. So if you're coming in with a relatively small, like 10 grand, let's say, so 10 grand, 50%, you're making 5 grand a year. So you're making almost 5, but that's 53% plus 20%. V curves at 20%. Wow. These are crazy numbers. Very crazy numbers. So you literally, run rate is 70% at the high end, because depending on your position size, you may have to go down the hard 49% compared to 53. So let's say 70%, you got 10 grand, you're making $7,000 a year, which is over $500 a month. XYZ. How much does it cost? It costs 10 grand. How much is it paying? $7,000 a year, run rate. What's the likelihood of it continuing to pay? I would say the likelihood is best interpreted as cyclical. I think in the long term, it's immutable. It's immutable and deterministic. So it's going to pay Y respective of market conditions. But it's immutable. So it will see the next frenzy. It will see the next bear market, and it will see the next cycle. It will always be there as long as this crypto space exists, paying you every week. So that's why the numbers are what they are right about now. That's why there's a significant floor. I mean, that floor this past week, that was a significant drawdown. Someone really pushed it down. That was a fresh lower low, by the way. But look at these wicks. Big buys. Now up at 44, 45 cents. Because it pays. And that pays big. That's a big number. Well, that's why Aura's got a relative floor as well. Even though it has less support and less of a federation, as we've discussed. But it was down there. And look at that big reversal candle, inverted hammer. Down to 50 cents. It's up at 70. Big wick through. Once the market starts to get into a frenzy and Bitcoin's 75, 80, 85, 90, it's just going up, up, and up. All this shit goes up. All this shit runs multiples and reprices, and your cost bases get reset. And then you're like, oh, it's pretty cheap at these prices. That's the burden that we have, is what to own at these discounted prices. What is discounted? What is truly systemic and infrastructure that's going to exist into the future? And my speculation is a lot. A lot of this is going to exist into the future, because these are not stuff that was created in 2017. These aren't capital raise ICOs. These are actual functional businesses providing products and services, financial products and services. Credit, foreign exchange, and derivative products, and I favor credit and foreign exchange. An AMM, your favorite swap protocol, is foreign exchange. It is what banks do. Remember that. This is not a game. It's not cartoon characters. I mean, it is, and that's okay. But if you look past that and you realize the capacity to exchange two things, all right, pick an FX market. Or what people do in brokerages with stocks, buying and selling. That's what foreign exchange is. And that's what these markets are. Because if a bank or a central bank decided to put some currency in it and somehow integrated settlement and payment processing and all that shit, this would facilitate that foreign exchange. And that's why the WEF looked into Curve is it the IMF? I don't know. Point being, that's why the big banks and the big organizations look into these protocols. What can they do with regard to foreign exchange? Now, clearly you can make better protocols in-house, centralized, controlled protocols. But I think they'll all realize that this public infrastructure is significant. That's something I talked about a long time ago, like with DigiByte. This was years ago, and I always said public infrastructure, where anyone could use it if they wanted to. And that's driven by market forces. And the market will tell you what is good tech, meaningful tech, and products and services that people want, because they will use it. Now, clearly, we look to the volume chart for that. Now, if you look to the top of the charts, Uniswap is a very useful product. $1.6 billion per day. Very used product. Clearly, $300 million is not trivial. In fact, it's massive. And further, that's not really going to be their primary business, in my opinion, in the future. I think they'll be swamped with credit, and credit will dwarf their AMM. That's another story. But this entire page right here is a testament to this being nothing like 2017, 2016. And 2021 was just people figuring out what the hell all this shit is. So you can't compare this to 2021, although if you do, this is remarkable numbers compared to 20 and 21. But this is a whole nother planet. This is a whole other galaxy compared to 16 and 17. There was no products at all. No services, no nothing. It's all hot air, capital raise bullshit in 16 and 17. Except now you have businesses. So, whole nother ballgame. Anyway, hope that helps me and my digressions. Damn it. Where were we? No horns, no tail. Good morning. Idan, the greatest. Thank you. I appreciate it. Prinz Raziel. Hey Cap, love your insights. Sir, any thoughts on a good entry for Jupe? No. I tried to sell it at a decent price. I just took it as income. I have it up here somewhere. I was looking at W and Jupe. I want to buy this stuff. Actually, probably right about now. Go figure. Look at that moving average. 10 SMA in the weekly. Too new for a monthly chart, daily chart. A lot of congestion there. A little below the 50 SMA. Time weighted average price, 10 SMA in the daily. I don't need to. The market cap on this thing is large. What does it go, 10x on the money? Ethereum's going to go 10x on the money. What do you need exposure to this shit for? Does it pay any cash? No. So there's no benefit of it versus something that's much more boring. That's going to probably run the same amount of multiples. It's just off the radar in that regard. SW as well. It does nothing. It's all venture capital exit liquidity. They drop it on the market, and it allows the seed investors to exit and dump it on retail. That's what an IPO is. That's what an ICO was. That's what a capital. That's the whole playbook of venture capital. So no interest in stuff like that. Stuff like that is not how. Because you're not going to get big moves. It's a high market cap asset. It's not like you can get 10x's, like boom, 10x, boom, 10x, boom, 10x. It's out of the realm of reasonable. Always brings up the topic, always comes to mind, how do you get off a small portfolio? How do you break free, break out, and start expanding so you can even start investing? It's catch-22. And I have my hindsight to deal with, but I also have where I've come to be with my mindset and what I would recommend to friends and family and kids. And I would say, stop trying to get rich in crypto. And I say that probably most strongly as a contrarian, because that's what everyone comes here for. And stop trying to get rich. That's how you fuck it all up. Treat it as an emerging market, which is an extraordinary opportunity with regard to investments, which requires a very adult mindset, very rigorous, educated mindset to digest what the hell a good investment even means. And that's literally this entire stream and a lot of the times what we talk about. Stop trying to get rich. You're going to serve yourself well and do well and grow. And then at some point, invest. And investments give you income. You've purchased a salary. You go to school to be educated so you can have a job for a salary. You're trading time for money, whereas as you get older, you realize you can purchase a salary instead of work for a salary. You're either spending money, you're either working for money or you're paying people not to work. You're paying them so they do the work. So that's something I remind my wife about with regard to expenditures. Yeah, I've worked a lot, so I'd rather pay for someone else to do the work if that capital is available. It's just a binary reality of who does the work and who's getting paid. So with regard to salary and either working for it or buying it, that's just an interesting perspective to have on what the hell is a salary, and you can actually buy a salary. Okay, I'm cool. I'm game. That sounds good. Buy a salary. Ricky Stewart, the numbers are shocking. My V curve position is sizable 6 figs. I'm second guessing myself because I buy more, and I'm wondering why no one else can see what I can. Well, if anyone appreciates that, certainly myself. The reason why the vast majority of the space, especially like social media, X, and whatnot, don't see something interesting is because of literally what I just talked about. People are trying to get rich. Curve isn't a great way to get rich. It's a way to get healthily wealthy, in my opinion. So what does that mean? My sentiment on curve, and I'm probably in that ballpark as well, size-wise. All right, fine. Goes 5x on the money. Goes 10x on the money until next year. So your 6 is a couple of 7 and change, hopefully. And it's producing 30, 40, 50%. If it's producing 30, 40, 50% in a raging bull market, yeah, that'll probably contribute to like 5, 10x on principle. Everything gets disgusting in these crypto bull markets. So whatever happens, it's going to overshoot bigly, 20, 30, 40, 50x, and then crash to a 10x or 5x of where you currently are. Wouldn't that be interesting? Let's say, so my general trajectory in my mind, let's say it's like 100 grand, and it goes 50x on the money. The 100 grand turns into 5 mil. And then everything crashes and burns, and you're left with a half a mil to a mil at like bottom, and everyone's bleeding, and everything's falling apart, and your 100 grand turns into 500 grand. Let's take the bottom end of the spectrum I'm discussing. In 4 years' time, from an investment perspective, 500%. You're not doing that with Amazon stock. The world's a different place if Amazon stock goes 5x on the money and there's no corporations left. You're not doing that with Microsoft. You're not. Tesla's a little different, maybe. But 5x is crazy because, one, that's a big number, 5x, 500%. But then you're also just getting paid cash. So you're making 20, 30, 40, 50% on a half a mil now instead of the 100. So you're making a couple hundred grand a year. Okay, looks like that was buying a salary. If you're making a couple hundred grand a year, that's most people's salaries. So that's a potentiality of rolling the clock forward. We know crypto markets get disgusting. We know blow-off tops are just beyond insane. So let's say it crashes 75, 85, 95% from that blow-off top. It goes to 10 mil. 100 grand turns into 10 mil. Goes 100x on the money. And it crashes to a half a mil. It wasn't the top that matters. It's that you saw it early, made 5x on the money, and now you're making a couple hundred grand a year. I am not here to say, oh, that guy missed out on 10. I don't give a shit. I don't give a shit about missing out on that kind of money. What I care about is not trying to make as much money as possible, because that's how you survive and that's how you stay healthy in your goddamn head. Stop fucking being greedy. Stop being greedy. And that is your first attempt to do well and be humble, because that's an extraordinary result if that is exactly what plays out. You'll be healthier up here if you stop trying to get rich, folks. My 2 cents. Ricky, me as well. 2021. Me too. I was buying the bottom. Where's curve? I got plenty of original position from back here in the 30s. I got plenty of original position from back here. Not what I ended up with towards the end of the market. The vast majority of the overall position I have today is from the end of the market, but plenty of it is from here. I was buying all the way down. And folks will completely miss what is really going on here because they're stuck in this. You got to turn $1,000 into 20 mil, and what the fuck are you going to do with the 20 mil? What are you going to do with the 20 mil? What are you going to do with it? What are you going to do with it? You know what you could do with? I'm going to get a paycheck. Hypothetically, I'm just saying. Let's say you get a paycheck for 20 grand at the end of the week. Okay. What are you going to do with it? You probably have a better sense of what you're going to do with a 20 grand paycheck at the end of the week as compared to a lump sum 20 mil. What the hell are you going to do with 20 mil? Probably going to be like, oh, I got to invest some of it. Oh my God, now you're back to square one. What the hell are you going to invest in? Stop trying to get rich. Ricky, yes, it's been interesting. Yeah, look at you. It's a conviction with 3 years worth of revenue stream. So what I've done the last 3 years is I've charted the cash flow, like QuickBooks and stuff, and you're able to do bookkeeping and accounting, and you see how much you're making on the monthly. It's going to go up, it's going to go down, and at some point the whole market reprices. Why is this market going to reprice? Because the whole global currency composition, tapestry, is going to expand. And it's like what Raoul talks about, Raoul Pal, with regard to number optically go up and debasement and whatnot. But if you defied S&P, Nasdaq by like M2 or Fed balance sheet or what have you, like global M2, it doesn't go anywhere. This is the only place it goes somewhere. So when you do that lump sum of like 20 mil and somehow miraculously sell the freaking top, what are you going to invest in if nowhere other than tech stocks and crypto go anywhere? Kind of simplifies the equation. What are you going to invest in? So there's a great burden that comes along with having an excess amount of capital. It is much healthier to think in terms of how much damn capital are you going to have on a Friday, and then assessing that capital on a Friday is going to come. Maybe deterministically. Maybe the software doesn't really have an opinion, like a board, on how much dividends are paid out. Or the software doesn't have any debt, so there's a potentiality for the business to not exist because they go insolvent. Or the board fucks up and hires too many people, and their balance sheet gets all out of whack. That doesn't exist with smart contracts. So, my man Ricky, smart man, DeFi advisor, he's called the cap for a reason, folks. When cap? When I could get a Discord payment solution on Arbitrum. That's basically it, and I don't have that right now. If I had a Discord bot that could manage subscriptions and accept payment on Arbitrum in a specific cap token, yes, I'd make cap token. And I'd slap 1,000% APR on it because that's the kind of voting power that I have on Ramses. So that would be very interesting. I just don't have that kind of technological solution, unfortunately. One day, because I have the capacity, I have the voting power, and technically I already launched the token on Arbitrum. It's already there. I can't hook it up. I don't have the payment service. Is what it is. One day. Dustin, folks are quite short-sighted. My conviction for Curve got higher after watching DeFi 2.0 crash. Yeah, Curve was still standing. Still standing. That's the thing that everyone misses. Like, oh, why is the number not going up? Because they're here for the wrong reason. They're here to get rich, not to get wealthy and healthy and buy salary, so they can merely replace their income from work. That is the holy grail. And that was my big wake-up call. Let's say you make 100 grand a year. You're able to pay all your bills and everything is good. You're not getting anywhere because everything's freaking expensive. But if you could somehow get 100 grand a year not working, like on the side, purchase it. That changes the equation. All right, probably still in a working situation, which is kind of like my case. I still work. But now, all of a sudden, you have your salary from work and your salary that you bought. And then what do? Probably going to have some extra cash, and maybe you can find a discount on some additional salary. And you buy more salary. And then you roll the clock forward 8 years, and before you know it, you're making 2 times your salary, 3 times your salary. And now you're able to compound even faster, and then next cycle you're making 6, then you're making 12, and maybe even it goes exponential and you're making 10 times your salary. It's the short-sightedness and the desire to get rich that really hurts people the most. Hope that helps. All right, and true, people are looking for shorter and bigger bets, and is what it is. It's unfortunate, but I could scream from a mountaintop like a preacher of sorts, which is kind of what I'm doing to you guys right now with my giant monologues. No, the folks don't want to hear it. Everything's emotionally charged. The kids don't want to listen. In the end, people are their own worst enemies. And greed and desire and abundance and consumption. I speak in very religious terminologies. I'm not religious at all, but I'm all those everything. All the ideas about humbleness and virtue and coveting and greed, and I love all that shit. I always said there was 2 things I wanted to do if I could redo life, like college and was born into a wealthy family or something. I would have loved to study language so you could communicate with people, and I would have loved to study religion so you could understand people. There's endless religions. And you need to understand all of them to really understand people. So the fascinating concepts of the countless, endless religions on the planet. Anyway, I hope that helps. That was a bit of a digression, but that's what really hurts people the most. That excessive desire, but it's not even a defined desire. The first and most important thing to simplify your engagement with the investment process is to set your damn goals. What do you want to achieve and why? Where do you want to go? Where do you want to go? What do you want to do? How can you even begin to navigate and figure out the choices if you don't even know where you want to go? What do you want to do? Oh, I want 20 mil. Then everything changes. Yeah. Now you got to really figure out where to invest because that 20 mil melts really quickly. Anyhow, we know that because of like lotto winners. Almost all lotto winners are dead broke. So food for thought. Ricky, and young investors tend to see curve as for okay boomers. Great. They can see what they want to see. I can't help everyone. In fact, I can barely help anyone. 192 people on the stream. Welcome to the smallest rational community in the crypto space. Maybe it's the only rational community in the crypto space. Dustin, I saw a financial advisor recently do a retirement check, and he legit said he held Doge because if it ever hit $1, a man who makes $200K a year as a financial advisor has this mindset. Well, yeah, it's got to go to $1. Doge is going to $1 at some point. Do you see its price though? I mean, $1 is not even a 10x. Turn $1,000 into 10 grand. So the Doge train is gone. So what? It's a conversation to be had. What these meme coins are becoming. They're becoming like socially adopted monies. They have degrees of moneyness, not currency, but they have degrees of moneyness, and that is a legitimate phrase. An entire conversation about what that means, but that's kind of what they are. Social consensus has dictated that these particular assets have degrees of moneyness. Digest that one. Not going to do much on Doge anymore. And I don't care. I don't care about the whiffs. I don't care about the Andes and the Bretts. It is what it is. Fortunately, I don't need to care, and that's okay. You got to find what you need to care about. Isn't that that's kind of a very deep statement. You got to find what you need to care about to be healthy. HBAC, people are addicted to the game of speculation. Endless. Lotto tickets are sky high in the U.S. It's record-breaking sales of lotto tickets. It screams of two things: the disparity, the desperation, and the lack of rigorous definition of a thesis of where you want to be and how you could potentially get there based on the choices that are available to you. And that's what we're doing on this stream. We're determining the choices that we have. S&P 500, real estate, start a business, U.S. equities, NASDAQ, crypto markets. These crypto markets, it's the only possible relatively passive investment that even has the potential, the remote potential to achieve what hopefully you define as your goal. And it's very few, probably fewer, succeed at entrepreneurship and starting a business. Starting a franchise? What, are you going to start a franchise with debt? What, are you going to start a pizza shop with debt? Quit the debt. Stop the debt. You don't need the debt. So work with what you have. Work with the resources that you have and your capacity to spend less than you make and to accumulate, and then to invest that accumulation into purchasing paychecks and then check back in 4 years. And the odds are you picked at least one thing that was systemically important, systemically significant. And then in 4 years' time, you will have greater income from work as well as your hopefully successful purchases of salary. Greater income, you'll be able to buy more salary as time goes on. That seems sustainable. And I can't think of anything else that is more likely to work. That seems like the only rational path, and that's why I walk that path. There's no alternative. Tina's back. Tina was hot in 2020 and 2021. Tina, there is no alternative. There was never any alternative, ladies and gentlemen. This methodology that we discuss is the only rational way with favorable odds as compared to basically anything else that I'm more than happy to discuss very granularly and specifically. Real estate, entrepreneurship, debt to buy those things, all that work associated with a business, technically all that work and risk associated with real estate, is it booked? All the repairs and maintenance, all the expenses, versus an immutable contract that has no expenses, no debt, no real estate, no board, deterministic rules. It's going to pay this cash to you under these conditions. So great. So the conditions get frothy. All this business activity, and it's going to pay the cash to you because that's the rules. Determinism brings incredible comfort. Dustin C., I'm buying like it's 2030. We'll end on this comment. It's a good comment. My mindset right now is basically 2027-ish. And it's very comforting. I know where things are basically going to head in the next 1-2 years. You know, that's on the horizon, and that's kind of clear based on what's macroeconomically portrayed in these very charts that we're looking at. Clearly not this chart, but... and go out to the yearly chart, back to 1967. If this chart does not go down over the next decade, we will see countries fail, And if we don't have geopolitical conflict, it doesn't make any sense how we don't. Because if you're taking out countries and countries are failing, they do what they need to do to survive. Existentiality. This chart must go down. Or the alternative. So if we got geopolitical conflict, none of this shit matters. So you don't invest based on the end of the world. If you want to invest or do something to prepare for the end of the world, you probably should be thinking in terms of like off-grid solar, off-grid water, some sort of farming in your backyard, maybe an underground bunker with a shitload of canned food, meals ready to eat, and a bunch of shotguns so you can defend yourself. Unfortunately, that is not like the largest budget. That's a relatively nominal budget. I mean, you could do a lot with like 10, 15, 20 grand. So, and if you got a portfolio of like 6 figures and change, and you're hedging it with 10, 15, 20 grand, because that's it. Either the global financial system, the global monetary system is going to expand significantly, in which case the crypto markets are going to be crazy, or everything collapses and your 10, 15, 20 grand hedge, that's all that matters. So the world has become very binary in that regard. It's one or the other. It's one or the other. We know the greed of man will never fail. Never, ever, 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 ever. It's horrible. Well, fortunately, and that's what our business is, servicing credit. So you don't have to be greedy to want credit. Not everyone needs to be an investor. You can borrow to finance purchasing. Standard operating procedure, like net 30, net 60, net 90. You don't pay your supplier until you actually make the money from your sales. So you need working capital. All right. So if the banks don't have a capacity to service working capital, maybe crypto markets can, because they're permissionless and you will never, ever, ever, ever get denied a loan. Just got to post collateral to protect the system. So these systems will be there when banks can't lend, or there is no credit available, but these systems will lend under all conditions. And that's an extraordinary business, in my opinion. Hope that helps. Oh, I made this comment in reference to politicians in charge of the money policy globally. Yes, consumers too. Yeah, it gets complicated with regard to politics. Clearly self-serving, self-dealing, shit like that from politicians. That's clear. Anyway, I don't want to get into politics. Shit's all messed up and drives me nuts. Listen, thank you all. 195 people made it to the end of the stream. I appreciate everyone that listens to my hour and a half of rambling on a couple of days a week. And it means a lot to me. Thank you for entertaining these monologues and trying to do better, because, as I say, you can only do better together. Wednesday, April 24th at 1:08 p.m. Tell everybody to subscribe. Discord is pretty good. I got Spritz Finance and LaunchPass hooked up, so you can now handle Discord subscriptions using pretty much crypto on Arbitrum, and I think they support Optimism, and it's a laundry list of networks that Spritz Finance supports, and I happen to like that approach, considering or compared to other approaches I've taken over the last couple of months figuring out crypto payments. I'm like, all right, just virtual debit card, boom. And Spritz is like, I've done like 5 figures through Spritz to bank accounts, and it's really nice software. Very, very impressed with what they built over the last year, 2 years, something like that. I'll see you guys on Friday. Y'all have a good one now. Peace.